Thank you for joining me, and thank you, Andrew, and thank you, Chris, for being with us, although virtually. Perhaps next time you make it to Hong Kong. So we've been talking a lot this morning and earlier this afternoon about sustainability, climate finance, and so on and so on. But one thing that actually didn't come up, and I'm surprised that this didn't come up, is the price of carbon. And actually, carbon markets are intended to deal and to put exactly this on the map, the price of carbon. So within this panel, we will quickly go through a few things that have been happening in the past few years, and we have stakeholders from different positions to kind of try to unpick a little bit how we can actually put price of carbon and how visible this really is. And perhaps I start with you, Matthew, and ask you, we talk so much about carbon markets, and we still haven't sort of concluded what the role of the carbon markets will be. And the fact that this hasn't been brought to the discussion so far is perhaps a good illustration that we're not yet sure how to deal with this instrument and how important this is. So what do you think the importance of carbon markets is?
Well, thanks, Diana, and very happy to be here and very happy to talk about carbon markets because I think it is an exciting area. It's also a very critical area in terms of how do we think about sustainable finance, how do we move decarbonisation. I mean, a lot of people are talking about the changes that need to happen both in the real economy. Obviously, from a financial institutions perspective, there are things that we can do, and we can do things with regulation. But at the same time, we need to have the right kind of price signals and incentives in the real economy. Otherwise, we're just pushing on a piece of string. And I think if you think about decarbonisation, if you think about carbon emissions, that's really a market failure, of course, because we're not in a position to price in the externality of carbon emissions and what that's having on the environment and society. And so carbon markets are a really important way, and it's not the only mechanism that we need to rely on, but it's a very important way to internalise some of that. And it really is about setting a price signal to then create the right kinds of incentives in the real economy. Now, there's different markets, of course, just to lay the table a little bit for our conversation. There's obviously compliance markets and there's voluntary carbon markets. Compliance markets are very important from a national perspective often, so particular sectors, it's important to tie in national goals around decarbonisation to then either through carbon taxes or through compliance markets, so we can set up caps and then translate that into a price signal. And then the role of voluntary carbon markets. Voluntary carbon markets are really important in terms of, they can be a transitional mechanism. So if there's certain sectors that you can't quite, are difficult to abate, or they are not covered by compliance carbon markets, then voluntary carbon markets can play a role. They can also play a role in terms of corporates. Corporates may want to offset some of their carbon emissions, and while they still will need to decarbonise, that can be a mechanism for them. And they can also play a role, yes, as I said before, alongside carbon taxes, etc. And the benefits of them are around flexibility and efficiency. So you can think very flexibly in terms of, well, how do we offset or how do we reduce carbon over here and then have the impact in another place. They can also enable capital to flow to existing solutions. And so individual organisations or individual players are not coming up with their own kind of offsetting. If you set up a market and it's deep and it's broad, then there's an opportunity to make sure that we're investing in existing scalable solutions. They also can have co-benefits. So, for example, there's technology-based solutions. There's also nature-based solutions, and so you can also have co-benefits. So whether that's in terms of social benefits. So, for example, some speakers have talked about certain solutions also having benefits in terms of social. It could be around creating industries. It could be around creating jobs. So there's economic, community development on certain types of projects, and there's also co-benefits from an environmental point of view. So there's some of the benefits and some of the use cases for carbon markets. But at the end of the day, it's really about making sure that the real economy has price signals and also the right kinds of incentives.
Yeah, I totally agree that without a price signal, it's going to be difficult to motivate the market to move forward. Perhaps I ask you, Chris, you work a lot of corporates and with end users of these carbon credits and with potential, with the market itself. At the end of the day, every market has one judge. Is it used or is it not? So what is your kind of assessment so far? How useful the market see this, especially the voluntary carbon, the offsets and this kind of additional mechanism?
Thanks, and thanks so much for having me. Yes, next time I really hope to be there in person. Look, as you say, a really critical question. You know, is this being used? Is there demand? And as Matt outlined there, there's two kind of types of carbon markets, the compliance versus the voluntary. Now, in the compliance carbon market, demand is largely set in the regulatory framework. So that's often constructed so that companies do really have some clarity over a period of time in the future about what's expected of them. So they can make investment decisions. But as Matt said, there's also this voluntary carbon market. And I think I'm going to really kind of zero in there in demand, because that's a really important question. Are people using this voluntary carbon market tool? What I hope my answer says is a lot about actually how far the voluntary carbon market has come, and hopefully I can inject some sort of optimism into all of this. I've been working in carbon markets for about 15 years, and a lot of that in the voluntary carbon market. And probably for the first 10 or 12 of those, I seemed to spend most of my time talking about how there wasn't enough demand. So scaling demand was really what I was thinking about. That was priority 1, 2, and 3. And actually what we've seen in recent years in the voluntary carbon market is demand really starting to pick up. A doubling over some of the last couple of years each year. So a real acceleration of growth in this demand for voluntary carbon credits. Now, it's important to note that the voluntary carbon market, as Matt said, is a tool. It's a way for companies to complement, not to substitute, the decarbonisation as they transition to net zero. But that framing of net zero is, I think, what has sparked a lot of this new demand. Companies setting these net zero or similar targets. Yes, it's driven awareness and engagement to reduce gross emissions, and that's the most important step for any company, but also corporate interest in the tools that help them deliver negative emissions so they can then balance those residual emissions to get net. So how do they drive towards net? Is by having something to balance what's going to be left in their gross emissions. And the voluntary carbon market, many are seeing as a key tool to help deliver that. Now, unlike previously demand, over those 15 years or so, I've seen rising interest from corporates, and then it might sort of drop off again. And so why do I feel this is different? And I do feel this is different now. Well, I think it's bigger than before. I think it's across all sectors. This really is all types of businesses that are starting to get engaged. It feels much more, it feels very global in terms of corporate demand. And in fact, demand for carbon credits in Asia is a key part of that growth story in recent years. And perhaps most importantly, it's quite a sticky demand. I think this demand is likely to be sustained. Perhaps because I think companies are going to be held accountable for their net zero commitments. And a recent survey of companies suggested that 55% of their respondents said that their spend on carbon credits is non-discretionary. They see this as fundamental and critical now. So the voluntary carbon market has come a long way with demand and use, and it feels very different now than it did just a few years ago. I think moving forward, you asked, well, you sort of were asking, is there been enough demand in some ways? Have we really got enough corporates here? I think the last thing I'd say is about the type of demand is really going to matter. Essentially, a company is able to send clear, strong, supportive signals to the market so that investors, project developers can really respond with confidence around what market demand will look like in the future. I think that could be a really powerful signal to really help further scaling this as a tool.
Exactly. Actually, being able to project into the future is one of the key market drivers, isn't it? Because actually, market is so much sentiment driven. So it's really all mathematical models are powerless when it comes to market sentiments. And I don't want to quote the recent events that we all know about. But anyway, let me turn to Glenda now, because Glenda, you at Hong Kong X launched Hong Kong International Carbon Market some time ago, and then just recently, a few months ago, created the voluntary carbon market trading platform called Core Climate. And since then, you've done quite great, for which we have to congratulate you. But Core Carbon is one of the Core Climate is one of the various platforms that has been created recently, not only in Asia, but globally. I'm just wondering, from your perspective, you probably already have a fair amount of reflection of what is happening. What are the pain points of investors and corporates, and how are you addressing them? Being now live, having a live market, how do you see the world?
Yeah, we launched Core Climate, I think last October. So for the first couple of months, we are seeing very positive response to the carbon marketplace. I think for the first couple of months, end of last year, we traded around 400,000 tons of carbon. Obviously, the carbon market is still very nascent, so it is exactly what we expect, how we will start off with the carbon market. But the important thing is network building. So in every single marketplace, which we build all the time in HKEX, building the network is extremely important. So for the first couple of months, we onboarded around 30 players into the market, 30 participants, and now the number of players have grown from 30 to 50. So we are seeing people responding to the carbon market needs. The second thing is we launched the Hong Kong International Carbon Market Council back in July of last year. And the purpose of the council is to set directions, is to help us to build the carbon market. So when I look at the composition of our International Carbon Market Council, we got a buyer. I got a lot of large Chinese corporations that are joining the carbon market. They are buyer. They are also seller as well. They're actually developing carbon projects for China and the world. And we got a lot of financial institution intermediary participating in the carbon marketplace. So obviously, I think it's a very wide range of people that are interested to help us and to help Hong Kong to become an international center for carbon trading. So in the last couple of months, when we were dealing with the buyer and seller in the marketplace, I mean, obviously, there are positive feedback about the risks that we can help them to alleviate. In particular, settlement risk, counterparty risk. If I'm buying carbon credit, the last thing that I want to worry about is, I mean, can I settle the trade? Is it safe? Where is my money? Where should I put it? I mean, those are in financial world, so some of the very basic things, but yet extremely important thing. So I think that the Core Climate was able to help them to alleviate that kind of risk. But having said that, I think the market is still developing. So I just want to highlight a couple of things that we observe, and our council or our buyer and seller tell us what are some of the pain points or some of the things that they're looking forward. I think some panelists also mentioned about that as well. So the first one is clarity and guidance. So when I think about the journey we have, I think in the last 10, 15 years, people are trying to make sure you are educated about the importance of emission. I think by now, I think for every single corporate, I think everybody have ESG as a top agenda items, and climate is one of the top things. Global warming is one of the top things. So I don't think we need to worry about, I think people are educated, people are all bought in to the concept. So after you bought in, what do? You want to have a path, have tools to net zero. But then it will be also important to give people some guidelines, or people are lost right now about when we talk about net zero, what is the right path? Do I reduce before I offset? Do I offset before I reduce? Do I reduce to the 80% before I offset, or is it 70%? So I think that there is a lot of desire to enter into the carbon marketplace, but what does good look like? What is the right thing to do, right? What is the ratio that is sort of right? So, I mean, right now, because it's a voluntary carbon marketplace, so people are all using their discretion. So I think that people may need more clarity. Secondly, when I talk about clarity and guidance as well, maybe that relate a little bit to standard. I think all of you, I'm sure when you talk to people from the carbon market, people oftentimes refer to standard, the ICVCM standard. What is a standard look like? What are some of the carbon principle? There are obviously a lot of standard. There are carbon standard like in the world right now, but they're slightly different. They're slightly different. So I think that that is something that the market will need more information and a clarity on what is, again, what is a good standard look like. And then the other thing I want to mention, I think some panelists also mentioned about pricing. So I call it transparency and consistency. A lot of the intermediary that we talk to, people are saying, okay, I buy carbon credit, I help my client to buy carbon credit, but I need to mark to market every single day. So how do I mark to market all the carbon credit that I buy? Because all the projects that we're dealing with right now, the range is very wide. And there are lots of projects out there. When I say a lot of projects, it could range from forestry to solar, renewable energy, to biomass. There are carbon projects that have a social impact, co-benefits to the project. All those make a slight difference to carbon pricing. So if I am the intermediary, I need to mark to market my carbon price. There is challenges about all the pricing. So I think that this is another thing that we heard a lot from our carbon market player and also council about some of the pain points that they experience. And I do hope that as the market gets more mature, and I think a lot of us are talking about similar subject, and I'm hopeful that at some point we're able to provide more clarity, whether it's the industry, the government, or the player in the market, or some example, right? We give people some example and clarity as to what does it look like. So I think that's my observation.
Thank you, Glenda. It's great that within this short time that Core Carbon Climate has been existing, you managed to observe and really to synthesize some of the key challenges to the market and thinking about solutions. And perhaps one of those challenges is the actual integrity of the carbon credits themselves. And we have Andrew here with us, so I would like to ask him, Andrew, you represent Verra, one of those few companies that have taken on themselves to actually verify and scrutinize the projects via which these carbon offsets are coming to us. So how do you approach this subject? And I know there has been some criticism, and the industry itself has been trying to address the question of integrity of the carbon offsets. So I just wonder what would help you. I know you have worked on your methodology over many years. Do you need standards that will be universally accepted? Do you need regulation? What would help you help all of us?
Okay, thanks very much. And it's a pleasure to be here. I also wish that I could be in Hong Kong for this, but maybe another time. But thanks for having me here. And, you know, this is obviously very topical right now. The voluntary carbon market is, as we've heard, it's really growing very fast at the moment. This is the kind of growth in demand that I think we've never experienced before. And, you know, as you have standards like the ones that we operate, these standards are supplying credits both into the voluntary market and into the compliance market. So we've been hearing about it as well. So if you don't know Verra, we operate the Verified Carbon Standard. That's the largest certifier of carbon credits within the voluntary carbon market. And increasingly, it is used within the compliance markets as well. And we very much see the credit as being fungible across those different markets if it's accepted. Yeah, there are as we've just been hearing from Glenda, these pain points, and one of the big ones is around integrity. And I think you've had standards like BERA. We've been around for around a decade and a half now. I think when you're working in the field, you're very familiar with all the methodologies and all the different nuances of our standard and also other standards. And it's part of our bread and butter, and we understand it well, and we are confident in the quality and the integrity of the standard that we offer. But I think that the challenge really is, and we've already been hearing about it, is that if you're not familiar with it, then you are faced with multiple standards, and there are more and more, of course, coming into the market now. And it's very difficult to understand the differences between them and to understand what makes a standard strong and what makes a standard less strong. So it is a very complex field that people are trying to work with. So we've heard also just from Glenda about the ICBCM, that's the Integrity Council for the Voluntary Carbon Market. That's an initiative which has been going for a couple of years now. It's already in its second iteration. It started off as a task force, and now it's an Integrity Council. And what the Integrity Council is seeking to do is to develop what it calls a threshold standard. And this would be a standard, they call it the Core Carbon Principles, the CCPs. And it's essentially a set of requirements that they hope that all standards, all crediting programs within the voluntary carbon market space certainly would sign up to, that they would actually be assessed by the ICBCM, so that when after a program has been through the assessment and assuming that it passes the assessment, then it's allowed to issue what they call a CCP label onto the credits. So, we operate a registry which holds all of the credits that we issue, and what we would then do is we would put a tag on all of our credits to say which ones have the CCP label, and that is to be a guarantor of the quality that's achieved by the credit. And when I'm talking about the quality, that's something which is determined through a lot of different rules that we set up. So particularly around what's the additionality of the project, would it have happened without the actual finance from the carbon market? How permanent is the reduction that's being made or the removal that's being made? What sort of sustainable development benefits are involved? What sort of safeguards are there against environmental and social harm? Has there been double counting? These are the kinds of requirements which are being set up by the ICBCM. In addition to that, there's a whole set of governance requirements as well that each program needs to meet. And the idea here is that the market can benefit from more clarity as to what standards are good and which credits are good. And the whole purpose behind this is to be able to give the kind of confidence which will enable the market to scale. So it's all driven by the need to really do something about the climate crisis that we're facing. The pace that we need for that is incredible. We're talking about halving emissions by 2030, and that is an enormous challenge. And if the voluntary market is going to play a part in that, then it needs to have that assurance of the quality that's in the credits. So the ICBCM is to launch its first phase of its requirements at the end of March. These are a set of requirements which apply at the program level, and then after that, there still needs to be more work done on a set of requirements which will then apply at the level of different project types, and that's expected to come out around the middle of the year. And after that, programs begin to apply to be assessed, and it goes through probably several months of assessment. So I think that's definitely an issue which can help to sort out the fundamentals of the market and help the market to be scalable and enable users out there to be able to make more use of the market. I think the other difficulty that has been, and it's also been mentioned, I think, by other speakers today, is how can you use the offsets, and what is the role of an offset within a net zero strategy? And this has been subject to a lot of debate in recent years. Certainly, there is a need to move away from the way that we used to do carbon crediting, and that is that the carbon credit would simply be used as an offset. And there was much less focus on what companies were doing to actually reduce their own emissions, and that is very much changing. We have very much ensconced in our brains now the idea of the mitigation hierarchy, as it's called, the idea that companies have to reduce their emissions first. They need to set up net zero strategies and be shifting their emissions down to a net zero trajectory. Of course, it's going to take quite a few years to actually hit net zero, but we need to be able to get down to a trajectory which is consistent with hitting net zero. And then how can you use offsets in that context? And this has been quite a difficult field. I think, we definitely see that there is a role for offsetting still within a net zero strategy, but it should not be first and foremost. And where offsetting can be very helpful is it can offer flexibility which can actually help companies to enable their net zero strategies. So, we know that there are quite significant investments and quite a lot of time involved in being able to get down to a net zero position. And in the period where those investments are being made and the costs are being incurred, then it's possible to use offsetting as a supplement to the reductions which are being made. And there is another initiative within the voluntary carbon market. It's got a very similar name to the last one I talked about. It's the Voluntary Carbon Market Integrity Initiative. And what this is dealing with is it's trying to set up a code of practice for how you can use offsets while you are striving for a net zero position and following a net zero strategy. So they came out last year with a set of, with a code of practice which brought out a set of labels that they've talked about as gold, silver, and bronze. In the gold label, then a company would manage to get its emissions down all the way to this pathway, which is consistent with achieving net zero, without the use of offsets, and would then compensate all of the remaining emissions using an offset, or they call it compensation rather than offsetting. And there are a couple of grades a bit lower than that, because that is quite ambitious for many companies. So there is strong moves within the voluntary carbon market to almost self-regulate the way that integrity is being guaranteed within the market, and also the way that claims are being used by companies when they're using offsets and when they're striving for net zero.
Indeed, so many questions, and just the number of initiatives that you listed suggests how uncertain this field still is and how many things still need to happen. But whilst these things are happening, actually one of the things that we talked in the context of taxonomies, disclosure and so on was actually interoperability and fragmentation. And perhaps, Matthew, if I may ask you, do you think now is the time to actually look for potential synergies between these market spaces and how we can strive towards something which is more coherent and harmonious? Or shall we just leave all of these different trading platforms and various initiatives to kind of self-select via Darwinistic forces themselves, and then we end up with something which is acceptable?
Wow, so that's a great question. Yeah, I mean, I think the way I look at these things, and maybe stepping back a little bit, it's obviously we're all here about how do you scale the market, how do we get confidence. There's the supply piece, there's the market piece, and then there's the demand and confidence piece. And they're all obviously interrelated. The market piece is about how do you develop the market, how do you grow it, how do you make sure, and the end goal, of course, is to make it a deep market, a liquid market. You want it to be effective in terms of price discovery. One of the best things for that is obviously to broaden that market. So it is fungible across borders, for example. So that is about thinking and coordinating, and whilst it's important for different countries to develop their carbon markets, they also need to think to the future in terms of, how are they coordinating with other markets? How are they going to interconnect at some point, both with other voluntary carbon markets, but potentially even with other compliance markets? So that's interoperability at one level. And obviously, it also touches on regulation. So it's kind of funny that we talk about standards, plural, and the point that's been made so many times in terms of taxonomy. What can we learn from taxonomy? Well, everyone was trying to set the standard to make sure it was easy and was going to be internationally consistent, and then we all came up with different taxonomy standards. So we need to make sure that when we're regulating or we're thinking about standards at the domestic level, that we actually think about, well, is that going to fragment the market? Are we going to lose that fungibility? Are we going to lose that ability to interconnect with other markets down the line? There is a role for industry standards because, and speakers have mentioned a couple of times the International Council for Voluntary Carbon Markets, and I think that is moving things forward. And in a way, I don't know if it's Darwinism as much as I think a standard is emerging, and that's a lesson that we can learn in terms of, well, actually some of these questions are being answered by the market in an international context, and so we are going to achieve perhaps some interoperability and some harmonisation across markets, and that impacts, the quality of offsets, also the types of offsets, and so on with the core principles. So there's interoperability on different levels. Yeah, I think it's obviously there's in Asia we're probably particularly prone, as you well know, to fragmentation. Everyone wants to create their own market, but I think it's really important that we think about the future and enable in time interconnectivity and also the movement of capital and investment into these offsets that's in an international context.
Indeed, we shall recognize that we're still at actually initial stage, despite the fact that Chris has been in this field for 15 years, and I myself have been too, and I cannot believe that it's been so long and we're still asking ourselves these questions, but that's life, I suppose. So Chris, may I ask you then, since you have quite a lot of experience, as we already noted a few times, what do you think is still preventing the market to actually create the velocity, the liquidity, and the vibrance that is needed for real markets to put a price and to actually be a real mechanism for stimulating economic activities? Thanks.
Yeah, look, I think we've heard actually from the other panelists quite a lot of the specifics. So maybe just to reinforce an overall theme here that I think we've heard. The first point is hopefully folks have heard that the market's actually in a really exciting period. There's growth in demand, as I and others have mentioned, growth actually in new investments coming behind to support that demand on the supply side of the market, and a lot of growth in innovation and new ideas. So I actually think the market right now may well be at its sort of most vibrant to date. But I think the flip side to all that, again, as others have sort of pulled out, is that there are lots of options, whether that's the standards that projects follow, whether that's new service providers like carbon rating agencies that just didn't exist a couple of years ago, or even the array of climate solutions that the voluntary carbon market now supports. In the last couple of years, we've seen, say, mangrove protection with the world's largest project in Asia, or direct air capture projects supported by the voluntary carbon market for the first time ever. So that vibrancy is great, but there is a flip side that it's creating lots of options and much more in the market right now. So I think, as others have sort of talked to, I think the market will need to go through a period of working out where coalescing, consolidating, integrating is going to be really helpful. Maybe that's in relation to quality. We've heard about the Integrity Council's core carbon principles. Maybe it's about interconnectivity of trading venues. Maybe it's about standardization of some form of contracts to enable liquidity in certain parts of the market. Maybe it's about ensuring monitoring approaches are consistent across the market. The last thing I'd say is I think this will happen, and potentially quite quickly, in part because we have been here before. If I think back to sort of early mid-2000s, when this market was first emerging, demand was first kind of really taking off, there was lots of innovation, there was lots of new demand, there was lots of new investments. It felt very vibrant. And so, for example, there must have been 8, 9, 10 plus standards that popped up into that growing market in a relatively short period of time. But the market itself then coalesced such that around sort of 2020, 2021, just one market standard had around 80% of a market share. So, I think we've been here before, which gives me hope and confidence that we can channel this vibrancy, which is fantastic, and that we can work out how to get the right synergies and the right interoperability and connections going pretty quickly.
Fantastic. I like this optimism despite the many years of hoping. And we only have a minute left, but I cannot not ask Glenda about China and the connection to the mainland market. How do you plan to do this?
I mean, obviously, mainland is a very important part of the entire world net zero journey. I think from some of the statistics, right, China accounts for approximately 28% of the global emissions right now. And also it is estimated that $20 trillion of investment is needed to get into China in order to get into the net zero journey by 2060. So a lot of things need to happen in China. So thinking about what China have done, so there is a consolidation from the provincial carbon exchange into the consolidated national market in 2021. And China started with the energy sector, which is, one of the most important sector. So correlating that back into Hong Kong. So the first thing that I think the role that Hong Kong can play is the network. So I mentioned about the network earlier when in our Carbon Market Council. So a lot of the Carbon Market Council player, in fact, some of the participants in our markets right now, they are, I call it them carbon project producer, they are supplier, they are people that also buy the carbon credit as well, but they're also green energy and clean energy producer. So they play a big role in the energy transitions plan in China, transiting from fossil fuel energy into clean energy. So, and those networks are actually part of the network that we have in Core Climate today. So building the network, I think, is extremely important because those are the players that will be meaningful and impactful to the net zero journey down the road. And obviously, one thing that we share with China Common is we have this 2030, 2050 objective, and China have the 2030, 2060 objective. The other thing, which I think is unique advantages or unique value proposition for Hong Kong, we have a very good, you can say, financial infrastructure cornerstone. And we're very used to, and we know how to connect with China. And with our experience in Stock Connect, Bond Connect, there is a place that Hong Kong can play in connecting China with the rest of the world. So I think that this is an important part of the journey.
Absolutely, and I'm sure we will all want to capitalize on this, and I like the idea of the network. No system can exist without actually having the stakeholders buying into it. So that's a very good start and very good way of thinking. And we overrun as usual, and it's time for a coffee break. We can continue this conversation, and apologies for not opening the floor for questions, but perhaps you can grab the panelists after the session during the coffee time. Thank you so much. See you in a few minutes.